I bought S&P Global 2 weeks ago for $491.69. I spent 365 PLN on 14 groszy. And so today I'm going to go over the investment thesis behind S&P Global, my reasoning about it. And so let's continue. S&P Global, as you all know, is this company that we all know from the YouTubers saying, "Oh, invest in the S&P 500," but they do much more. For example, they have the ratings business, so they offer this. For example, for Microsoft, you might have heard that they are the company that has the AAA credit rating. Well, S&P is behind that rating. Market intelligence. Well, this is something that many fintech companies these days use, because you have this raw data that right now is a commodity. It is the backbone of the everyday investor. Many financial services use this data. I presume simply Wall Street, for example, as well. But in the presentation I gave the example of stock analysis. They have tons of data on markets, on the situation, news, etc. And so they sell access to their APIs, and that is very predictable, because once you own access to this API, you are less likely to switch. Why? Well, because it's comfortable and you know what to expect. You don't have to change your code. I'm a programmer, so I know what I'm talking about here. Commodity insights is another segment that right now is very important. Commodity traders, the aka gamblers, are someone who likes to read the latest news on how silver is performing, gold, blah blah blah. I personally don't invest in gold, but it is at all-time highs. People are looking for a place to store their wealth, so that is more interest, more coverage in the news, and so more cash for S&P Global, because they sell the insights for commodities for some hedge fund managers or other high income people, and they will pay. The reason that I chose S&P Global is not purely because of their popularity. You have other companies which are popular, such as Tesla, which I have not invested a single dollar in. Why? Well, because it's not capitalized, and S&P is capitalized. Their gross margins are around 70%. Here you can see indices have 70.33%. Why is that? Well, because it's very capitalized. But I haven't told you about mobility. And this is something like that. Imagine you are the owner of a car dealership. You want to know when you can sell a car, how to price it, how to finance it, you know, how to give loans for it, and you need data. Well, guess what? S&P Global is right there to help you. Every time you need some bit of data, you just click a button and you have it. And dealerships are willing to pay for that. So even though cars are something that I don't like, because, well, cyclical, mobility segment in S&P Global, well, you are paying for information, and that's capital light. We like that. As you can see, it's even better than market intelligence. And market intelligence is this here, the backbone of the everyday investor, so the APIs. A bit surprising, because you would think, oh, it doesn't need too much maintenance. Well, it's actually the lowest ranking server segment here, but okay. Indices, oh yes. Every time you hear a financial YouTuber shout the S&P 500, it's free advertising for their ETFs. And they charge licenses to other businesses who use their ETFs. For example, you have some BlackRock ETFs, you have some Charles Schwab ones. We have different ETFs, and that is the highest rating business. Okay, so now you know why we are buying it, but that's not all. Because I'm a long-term investor, I invest in high quality companies and ones which have wide moats. I created my own mode scoring algorithm, which is currently, well, in development. I'm still trying to get the best data for it and trying to make it even more accurate. So bear in mind, it's still in development, but my code right now generates only like the text you see here, but not the actual visual. So, you know, we are on our way and we will do it eventually. Here you can see that they have good pricing power and resilience. Their excellent capital allocation discipline shows, well, that they are pretty good at how their shareholders, uh, get their returns. Forward-looking innovation, of course, it is very important in a company like S&P Global. Uh, it's important that they don't stop innovating because different scoring models for their algorithms, all of that. What is here? Qualitative risk flags. Where that is something really interesting in case of S&P Global, as it also applies to different fintechs and not only fintechs but also SaaS companies. Um, well, for example, you have this risk of a customer buying a product that is bundled with other products. Like, let's say you want to buy, I will picture this on an example of fruit. Let's say you can buy a big basket of apples, oranges, and blueberries, and you pay $100 for it. And let's say you bought it purely because you like apples, but there isn't another choice, so you needed to buy this for $100. But if someone pops up and says that, oh, I can sell this basket of apples for $50 and it's only apples, well, then you have this question whether uh, people will switch providers, so they will switch from S&P Global to someone else purely because they have the data that they need only, because sometimes those companies like S&P bundle products together. You had the example of Bloomberg, I think it was in the 2010s, when they bundled together different stuff. They had different bond rating algorithms, stuff, screeners nobody was using, and so it becomes really risky. And for S&P Global, that risk is low. They are well diversified across multiple segments, so you know in my opinion here, there's not a big risk with S&P Global in terms of that. And remember that I don't like risk because I'm an investor. And that was the case around the remote. Now, in terms of the quality, we can zoom in over here. That is also generated by my quality score, also in development, but I'm on the way to do it. It's not like the best rating, as you can see, 5.9 out of 10, but their operational excellence is good, strategic momentum is good, so they are trending in the right direction. Their pricing power is strong, cash efficiency great, because they are really good at making money from, well, the products that they sell. Of course, asset profitability may not be like the best, and their quality, in that sense that their profitability overall is declining for a bit. I suspect this is short term noise, so just don't forget that they are clearly the winner here. You can see all the positive aspects of the business here. That is what I like. And so I used a discounted cash flow valuation model with an 8% discount rate, and I assumed around 7% revenue growth rate for 10 years. The 5-year median was around 12%. So, it's nothing too extravagant. even the base valuation, this is very conservative. I think we might achieve even 10% revenue growth rates for the next 10 years. It's not impossible, it's likely. I try to be as unemotional in my decisions as possible, so picking this base valuation is fine with me. $530.40 is okay. This was done on the 29th of October 2025. So the price might have changed, but it didn't really. Well, you can see it's basically flat in this whole month. So I'm not worried about that. Mm, I bought it, as you saw in the beginning of the video, I bought it on the 3rd of November, so around 4 weeks ago, and I'm happy with the purchase. But of course, nothing is all good and always, well maintained. You also have sometimes risks, and I will address them right here. S&P Global is no different than any other company in terms of having clients. They have many high value clients like ETF providers, as I said to you, BlackRock, for example, analysts, companies, etc. So you have those dealerships, blah blah blah. The risk here is that regulators might offer a way of bypassing S&P Global surveillance of credit scores, because right now the situation is that you have the option, as a business, to, you need to buy the credit rating from S&P, then you need to monitor it. But if regulators offer us, a way to, you know, replace S&P Global in the surveillance, well, that will take the recurring revenue out from S&P Global, which, as we all know, has very good economics, similar to GE Aerospace with their engines and service. So, you know, this is also a possibility that a small startup will create some sort of, credit scores which are, being watched, quote unquote, on your company, so we can monitor it. And but I don't think it's likely. Product banding, well, it's possible. We have the Bloomberg terminal, but really we don't know. We don't have the tangible data. That the one I showed you, which is here. This is only a proxy. We aren't actually sure. We don't have that kind of public data that we can state with confidence that we are certain that there is no product ban. We don't have this data. We would need some, like product churn rates, exact numbers. We don't have that data. We only have like data about how many customers they might have, but even that sometimes is hard to get. And well, financial data is starting to become a commodity. So, you have those FearServe, you have those FactSet, you have many different providers of data, and they're becoming cheaper. I'm a developer and I like cheap. And so sometimes you might have, some SEC scrapers. Well, I'm doing something like that. Currently, it isn't something very easy, but it is for free. So, um, you know, competing with free sometimes is hard, but it is done. As you can see with S&P Global, they have the reliability of data. Developers like that. But the question is, are they able to keep customers? In my opinion, yes. And I rated them as a buy as of the 29th October 2025. Right now, the share price is literally the same. I'm still rating it as a buy. I think that this company is a very well diversified business that offers different verticals to benefit from, and it's not something that will go away tomorrow. it's embedded in the minds of beginner investors, the S&P 500, S&P 500, all these words are in their head, and they, you know, connect with this philosophy of passive investing. And so a position in S&P Global is fine. It's, very wide mode company, and I have put my own money into this. This isn't sponsored by them, and I'm a free person to talk about them, and I really like their business. Of course, this PDF here was sent to the paid subscribers on the 1st of November 2025, and they received it. So if you want to get some those monthly reports with some kind of ideas on what to buy next, well, you can consider becoming a paid subscriber with a 30-day trial to my Substack. Link is in the description. So, have a nice day.